Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's episode 43 and today is Jan the 30th, 2026. Mo, what's our topic?
Yeah, our topic today is higher crude oil prices because of the tensions between the U.S. and Iran, plus the plunge in metals market. If you guys have been watching, we've warned you about this metals market, so let's get into it. Here's your summary weekly quote chart. And I highlighted wheat because that was a win. Remember, this was month-end selling. So when you get to the month-end, funds typically tend to take some profits. And even though they were down slightly today, it was a win for the week. A lot of the grains hit chart resistance, and so a little disappointing to end Friday and the month a little bit lower, but not the end of the world. I highlighted hogs because we're not quite at new contract highs. 92 would be or 93. But we may have hit a resistance top here short term because we're well ahead of schedule. You've heard the headlines we've talked about the disease issues across both Canada and the United States. And we're so far ahead of the game that even in 2014 in the PED year, summer hogs really were closer to 94, not 110. So just, manage some risk here. We could correct into that seasonally weak Easter period. Some will argue and say, well, seasonals don't work anymore. Headline news and Trump and all that fun stuff. But, if you don't have disease and you're making money, if this is the worst you do, it's a great price. Bitcoin approaching that 80,000 support from year end of last year. I noticed today, and we'll get into it, but because of the plunge in metals market, there's a lot of risky assets like the hot precious metals, the hot memory stocks, chip stocks were being sold today because of month end. So crude, obviously, our title, 454 higher for the week. And then natural gas also was spiking because this Arctic blast continues to be very persistent. And then, of course, the gold, the volatility in gold. So new contract highs in crude oil for 26, new record highs midweek for gold and silver. And then, of course, we had the plunge today. So let's get into it. Let's start off with this crude oil.
Crude oil prices are at their highest since August of last year. And that issue with U.S. and Iran and the nuclear program concern is again front and center. So Trump warned that a U.S. armada is heading toward Iran, and this has deepened concern of potential military action in the Middle East. The U.S. president also repeated his push for Tehran to not restart its nuclear program. Trump warned the leader of Iran that, basically, quote unquote, or else. China and Russia vote to protect Iran if the U.S. attacks. And due to all of that, more oil prices are spiking.
Yeah, so Iran is probably the 8th largest producer in the world. Produces between 3 to 4 million metric tons. Here's the million barrels per day, 3 to 4 million barrels per day. It doesn't compare to the United States at 13 plus, and then Saudi Arabia at almost 10. But China depends on Iran for a lot of their oil, and we just hit the oil stick on China with Venezuela. And does Trump really want to irritate China again? Because 80% of Iran's oil does go to China. You can see the funds have added maybe a little bit they were very short. That's why we went to 55. And now they're maybe going long slightly. But long term, we remain bearish crude oil. And the reason why is because even though short term we've broken above this bear market channel, remember what got us down to 55. It was a global glut of supply, weak demand for this time of the year. And so between Greenland and now Iran, I think crude oil has as much as $10 of geopolitics in prices. So we're baking in a lot of the news. The question is, on the weekend, what happens? Crude is closing slightly higher to end the month and the week. But like Trump does with everything, is he threatening? Is he throwing around his weight and power? And do we get a framework deal on the weekend? I wouldn't be surprised, because he said last week he didn't want to start a war. If China's threatening, Russia's threatening, honestly, cooler heads need to prevail over the weekend. And so I would not be surprised on Monday if we do get a sort of framework deal. We could see crude plunging.
Precious metals are plunging, and mostly due to President Trump's pick for the U.S. Fed chair, and also fueled by overbought technical conditions, month-end selling, and higher CME margins, which have amplified the sell-off. And this was an excuse for all those longs to take profit. Kevin Wash is the choice as far as Trump is concerned for the U.S. Fed chair. But unlike what some had initially predicted, Wash is expected to be more hawkish and may not be the right pick to push forward aggressive rate cuts. Mo, what do you think?
Yeah, I'm surprised about this selection. And Trump wants interest rates to go to 0 or 1% anyways. I don't know if this is the right guy for the job, but I don't know if there was ever the right guy for the job. But the market doesn't think he's as dovish as Trump was suggesting. So the funds, I think, used this as an excuse to start selling the red hot precious metals. And you can see here, this is wrong here, folks. I said 61.4 on the gold, but that's actually silver. The gold is down about 21%, so I apologize. Look, we've provided a red flag warning about this in past podcasts. When you see something like this where the market is well above this 200-day moving average, it's a sell, period. We never know exactly when it comes to an end, but eventually it does. And the same thing happened with silver. There's that 61.4 in 2 days. And again, the 200-day moving average on silver comes in at 48.97. So I would not be surprised long term that we head back to earth before we bounce and maybe trade higher. But I think the bubble has burst short term in precious metals. Don't forget to check out our program. We got the app. This week we were talking about wheat, poverty grass. Why do you guys keep growing this? I don't know. Anyways, I know it's part of a rotation and you get straw and all that fun stuff, but boy, it's going to be tough to break these wheat prices. But like I said, maybe the funds are done going massively short wheat. So we'll see what happens over the next 3-4 months.
Some good news for U.S. farmers this week, Mo, but was it really good news? Trump was visiting Iowa and speaking at a farmer meeting or a farmer congress there. And he vowed to pass E15 in Iowa this week. He visited the biggest U.S. corn-producing state and directed his team to come up with compromise legislation and get the bill passed in Congress so that he could sign it immediately. What do you think, Mo?
Yeah, so I think Trump's just appeasing Iowa farmers to get their votes, to be honest with you. Look, how many times have we tried to get a bill for E15 year-round across anybody's desk, and it never happens? It's just another kick the can down the road. And then Brooke Rollins is saying, oh, we're going to keep using 2 billion more bushels if we pass this. By the way, this is not mandatory. This would be voluntary. And to use up 2 billion more bushels of corn, it would take years. So, that's why corn was down today. That's why corn hasn't been reacting, because to be honest with you, if Trump is chasing Venezuela oil and he's a fossil fuels guy, why would he want to go down this road? So if I was a betting man, I wouldn't bet that E15 gets passed in 2026.
Kalshi is predicting another U.S. government shutdown this weekend, and that possibility has risen to 87%. But a partial U.S. government shutdown has been averted, at least temporarily. This is, as of today, I believe, the latest news following a bipartisan deal reached last night between President Trump and Senate Democrats. The agreement separates the Department of Homeland Security, which has been, an issue, and from a larger spending package. So most federal agencies are funded through till the end of September, while the DHS will receive a 2-week stopgap extension to allow further negotiations. If DHS funding isn't resolved by the new Feb 13 deadline, the risk of a partial shutdown remains high due to a significant policy deadlock between Senate Democrats and the White House.
Yeah, this is good news because now the bridge payments that the U.S. farmers were going to get, $12 billion on February 28th, doesn't get kicked the can down the road. And the other good news is we're not going to be in the dark. When we were last shut down, I think the trade had no clue what was going on. So that's good news.
While the northern hemisphere is having winter, down south in Australia, a heat dome has caused temperatures soaring to 50 degrees Celsius or otherwise 122 Fahrenheit, and this has ignited wildfires through parts of rural Victoria. A huge heat wave is the most severe in 16 years, according to the Australian Bureau of Meteorology. Victoria saw its hottest day on record. Bushfires fueled by the soaring temperatures have caused evacuations and a state of disaster in some parts.
This could be one of those warning signs about what weather's going to do in 2026. I don't know about you, but if you're tired about the winter, just wait a couple months and everybody will be complaining about how hot it is. So those Aussies are probably doing that as we speak. But yeah, quite the reversal compared to what we're seeing here in North America.
This year could be more about weather than possibly the recent years. So this year is the Tonga volcano, or an image of it in the Pacific Ocean, and this is exploding again as of Jan the 20th, 2026. This was the last time we saw an issue of similar sorts was in 2022, which sent massive amounts of water vapor into the atmosphere, causing water temperatures to rise and droughts in local areas.
Another warning sign, folks. You can Google Tonga and get up to speed with this volcano, but volcanoes typically will cool down water temperatures in the ocean, but this one is so massive with that water vapor that it actually warms those Pacific Ocean temperatures, and it causes local droughts. I'm not trying to suggest that a drought's in the works for 2026, but because it's way too early to suggest any of that, but this could pose a problem moving forward.
We had the January USDA cattle inventory report, which was released today, a much-awaited report. It was slightly positive. Beef cow inventory now has been dropping for 9 straight years. The beef heifer decline after an 8-year drop has stopped. It is up by about 0.9% year on year.
Yeah, so this report again is quite positive. Very little expansion, in line with most estimates. So cattle futures on Monday should react accordingly.
Some more good news towards the end of the week. As you guys can see there on the screen, a lot of green on the screen. Week-on-week buying seen in corn, soybeans, all across the grains complex. Canola stands out there more, 18,000 odd contracts bought, reducing that net short from minus 71K to minus 52K. The corn net short drops from minus 81 to minus 72, whereas the soybean net length is increased again.
Yeah, in real time, I would think that the corn short position's a little bit smaller, even though we ended the week slightly lower. Beans probably long in 30,000+ contracts. I'd like to see beans break above 1080. Canola, again, still too short, but they're slowly covering that short position as we try to break above resistance at 650. And then you can see crude, the funds are adding to that long position, but I think it could be short-lived. And then finally, we just wanted to leave you with some wisdom from Henry Ford. If you always do what you've always done, you'll always get what you always got. It reminds me of New Year's resolutions. We all want to do something, and we got all these great goals, but if you don't have the discipline, it falls apart very quickly. So thanks for watching. Till next time, don't forget to subscribe to the channel. We'll see you next Friday. Stay warm, and don't forget, it's Groundhog Day on Monday, so go Groundhog Day. But either way, we're 6 weeks away from spring.
Bye,
Take
guys.
care, folks.